Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey, welcome everyone. We're gonna get started in just a couple minutes here. Just getting all set up, and then we're gonna get started.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure it.
Recording in progress.
Hey everyone, thank you for joining Stocks Network Trading. My name is Ron, my partner is Dave. Welcome guys, it is 11 a.m. Eastern. It's Wednesday, December the 3rd. Time is flying by, I cannot believe it. It's almost the end of the year. This year is flying by for me. I don't know about for you guys, but it's like this year just started and we're already wrapping it up very, very soon. So I hope everyone is ready for 2026. I hope everyone, has learned a few lessons this year in life and in trading. And let's have a good year starting in the next year. And because the markets are going to be intense next year. There's going to be lots of liquidity coming into the markets. Quantitative tightening is going to be ending. Powell already said that, so they're going to move into quantitative easing, and that's going to be more money printing, lower interest rates. So there's going to be trillions of dollars being injected into the overall financial markets in the next year, and so good times to come. The more liquidity in the markets, we can make more money ourselves, but we do have to be smart about it. We're not going to be gambling. We're going to be hitting our daily goals, and we're going to have a plan when we're trading every single day. We're going to have a routine, and that's the secret sauce right there, guys. That's how you can do it. Take your time with this. It's not a rush. You don't have to become a millionaire overnight. You can take your time. If it takes you years and years and years, you will eventually get there with the right mindset. Okay, guys? So we've got a lot to go over today, and we have a second session coming later this evening for Tokyo. I took a little bit of a day off yesterday. I needed it, had a little bit of a headache. So it's a lot to do, two sessions every single day. So I needed that break, but we'll be back later tonight, okay? So just going over, we will do gold, and then we'll move over we'll look at some indices. We'll look at US30 and NASDAQ in a moment, but we'll do top-down analysis. And there was some news today, as you guys can see, 8:15 a.m. Eastern, the non-farm employment change came out. So these were the employment rate. So the private sector shed 32,000 jobs in the month of November. It was pretty disappointing. So you can see over here, the previous month, they created 47,000 jobs. Look at the forecast. They forecasted only 5,000 jobs. Like, this is really, really setting the bar as low as you can. And it didn't even meet 5,000. It came in negative 32,000. So it's just showing you how the month of November, how it was shaping up over here. in the private sector employment, and not very good, okay? And then we also had some more high impact news at 10 a.m. Eastern, where we had the ISM Services PMI. And again, this is that ratio. Anything above 50 indicates an expanding market. Anything below 50, it's contraction. So came out pretty good, above their forecast and above the previous month. So ISM Services came out pretty good, maybe to balance those shitty employment numbers over there. So if you click on the folder and you don't know what ISM is, it's an Institute for Supply Management. It's the level of diffusion index based on surveyed purchasing managers, excluding the manufacturing industry, okay? So again, what I just stated, above 50 or below 50 indicates expansion or contraction, and it's a leading indicator of the overall economic health, and businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight onto the company's view of the economy, okay? So that news has already been released. The market has already digested it. There's been some volatility, and now we're going to come in and do a post New York session, okay? So let's see if we have any news coming up our session. So we're starting kind of over here. Crude oil inventories were just released about 30 minutes ago. If you are a crude oil trader, make sure you're looking at your inventories here, your week-over-week inventories. President Trump is also set to speak this afternoon. He spoke yesterday, and again, similar time, around 2:30 p.m. Eastern. We'll be wrapping up the call by then, and if you are trading, just keep an eye on Trump. Anytime he's speaking could cause some volatility. He could be talking about the financial markets. He could be talking about anything. And then it goes into the close, okay? And that's what we got going on. And then don't forget, later on this evening, we're coming back for a Tokyo session, okay? And our earnings, we had some earnings in the pre-market. We had Dollar Tree, pretty good earnings. They beat their EPS, earnings per share. They beat their revenue. Growth wasn't the best, okay? But good surprise, and guidance was mixed over here. So I like to judge what the dollar stores are doing, because normally in good times, bad times, in recessions, in depressions, whatever it is, I'm sure that everyone can still go into a dollar store and afford to buy some everyday essentials at the dollar store. If we see dollar store sales and guidance and revenue start declining, then it should be raising some alarm bells that those bigger ticket items at those expensive stores probably are not going to see the same growth if we're not growing these dollar stores, okay? So Macy's also reported. Again, we continue with the financials in Canada. Royal Bank of Canada, this RBC reporting. Again, banks are just, look at the numbers. The numbers speak for themselves. Even in Canada and the US, when the banks are reporting their financials, look at the earnings per share. They beat it, but the revenues are like 2x, 3x with the banks. So here's a clear 2x beat on revenue. They were estimated to make 12 billion the last quarter, and they made 25 billion. So banks are doing good, guys. You know, like if we're struggling ourselves, banks are doing really well. So we got to figure out, what are they doing? What are they investing in? How are they bringing in all of this revenue? Is it through loans? Is it through credit cards interest? Is it through investment in different sectors in the markets? What are they doing? Because we need to follow what banks are doing, okay? Because they're clearly making a lot of revenue quarter over quarter, okay? So let's just continue. And moving into the after hours earnings, there is a few names, okay? So these are more of your S&P, your NASDAQ names over here, your Dow Jones names. Salesforce is reporting. CRM is the ticker at 4 p.m. Snowflake is an AI company, will be reporting at 4:05. You have another AI, C3.ai, will be reporting, and others, okay? And everyday news, what we got right now, the private employers unexpectedly shed the jobs in November. That was that negative 32,000. So the ADP report showed private sector employment dropped by 32,000, with job creation seemingly locked in a standstill right now. So that's what we got going on. Service fees, yeah, I agree with you. All of the monthly fees, service fees, ATM fees, everything, overdraft fees, anything. Banks make a shit ton of money with fees, and the average person doesn't even look at these. it just comes out automatically deducted from their account every month. And some people don't even really care about it. But you know, some people average, I was looking at it, pay $50 in bank fees every single month. Add that up. That's about $600 per person in an entire population. Banks are in a good business of making money and recurring money month over month. So what else we got here? Stocks are under pressure as the ADP shows surprise in the jobs decline. Microsoft is in the news. Microsoft slides as reports says company lowers AI sales targets. Lots also going on in the markets. This one, bets jump on rate cuts from Trump-led Fed shift. So there's about, again, a 90% plus next week that the FOMC, Powell is going to drop interest rates another 0.25%. He's already stated that the quantitative tightening is ending. That started in about 2022, so it's been going on for about a good 2-3 years, and now they're going to start easing. Easing means printing money, lowering interest rates and printing money. And that money will be injected into financial markets. So if you guys are ready, I'm ready. There's going to be a lot of liquidity, trillions of dollars coming into the markets in the new year. So let's all learn how to properly trade, and let's get some of this money in the new year, okay? U.S. mortgage rates slide. What else we got? Just going through this quickly. Salesforce stock historically cheap as AI risk takes a toll. So Salesforce will be reporting in the after hours. This is their ticker CRM. They're pretty flat right now going into earnings. U.S. manufacturing production flat in September. This is Secretary Bessent plans to press for Fed Bank President District residency requirement. So earlier today, you can see Bessent here on the Financial Juice. He was making remarks and commenting over here. So he was speaking a lot this morning all over here, like right at Wall Street market open. You can see U.S. Treasury Secretary Bessent. All of these remarks are all of him here. So he's active. He's talking in the markets. And that's what we got going on right now, okay? So let's just continue moving forward, guys. Discord signals trade ideas here at SST. We send out a few. This was earlier on gold. Looking for buys, longs above 4,215. There's the body that closed above. A little bit of a pullback to about 4,217. Nice little wick, left a little fair value gap right there, and continued to break above key resistance levels, running for approximately 200 plus pips. And new setup right over here, looking for, again, volume to close above 4,220 and looking for a break, maybe a retest, a pullback, and good to go. So here it is right here, running about 60 pips with a 0.2 yielding 120 bucks on those signals. Also, guys, indices, we had one that was kind of developing here from 750. It was running a little bit, but then when markets opened at 9:30, it came back and hit break even, and then got to kind of recalibrate and refocus and see levels. Yeah, this was one sent out yesterday where it actually really broke out. So again, there's the breakout. There's kind of that Tetris piece right there, broke out. If you missed the highs up there, that's that FOMO trading. There's the pullback, came back down. Look at it, the wick right at that level, 47,407 right there. You could have got right back right in here, and then taken it for the longer leg up. Sometimes the pullback leg is the verification leg where it hits a lot of more pending orders and more patient buyers get in. So it took me years to train my brain to understand this. Sometimes I always wanted to buy those highs, you know, and you can see you're trading into about 50% of that block of that candle. And if you go across, then there's the pullback. And someone's going to say to me, Ron, does this always happen? No, but if you just keep your mind focused that there is going to be a pullback, you're always going to, not always, but you're more than likely going to get in nice profitable setups with minimal to zero drawdown, and the profit could be a bigger leg up. So just test this out, guys, you know, just back test or try it and see what happens. And work on it. Like, you don't always have to just trade live, like just go live trading. Do some analysis 1 or 2 days a week, and just see if this actually happens. And then you can strengthen your decisions without getting emotionally involved and losing money and getting mad at the markets and blowing up accounts, because it's just going to make it worse and longer for you to continue to learn how to trade. So I got a good blog today for us that will help for all of that. Okay. This is a free Telegram channel that we have pinned at the top of the YouTube for you guys. We have almost 200 viewers on YouTube. Thank you guys. I appreciate you guys. And there is this free Telegram. If you're not in this Telegram that's pinned at the top, right now click on it, because it gives all of our links to all of our live YouTube sessions. Here's today's. There's also like one I do after to get ready for the next one, so you know what time. There will be one later for Tokyo. This is Dave in the private Zoom with all the snipers, taking a loss in Discord and made it up via Discord with the live private. So guys, all traders take losses, but it's how you recover and how you make up, whether it's the next trade, it's the next day, or it's, you got to take your time. But when we lose liquidity as you in the markets, our next goal as traders is to recover that liquidity. It's not to recover it by revenge trading. It's not to recover it by upping your leverage. It's slowly to recover it, okay? Just like a financial institution, if they lose money, which they're not doing right now, but back in 07, 08, 09, they were losing money. And a lot of banks that recovered, I know there was a bailout by the government, but a lot of banks learned their lessons and they're not using that type of leverage anymore. So you and I got to learn like that too. Otherwise, or you're going to get in a habit of just blowing up accounts and repeating that process over and over and over. And we want to teach you the proper way of trading. I know it's not sexy. Nobody gets likes or views on this, but we're going to continue doing our job here at Stock Sniper Trading and continue to teach and preach the proper way of trading, okay? And everything is in here in this Telegram. Everything that Dave does in the private sessions, everything that we do here, all of our before and after of the trade signals, promotions, giveaways, all of that stuff, okay? It's the free Telegram. It's linked at the top of the YouTube. And then finally, guys, this is our website. If you do eventually want to join the team and take your trading to the next level, there's lots of education here where to get started. Courses, boot camps, webinars, everything is here for you. You can do like a self-taught education, like you're enrolling yourself back into school, and maybe learn some new skills in life, how to be financially free eventually. Live sessions, here's our schedule for the week. So we're on Wednesday. Dave already did the New York. Here's us all doing the post. And then later this evening will be Tokyo, okay? And here's a blog, guys, I just want to go over. There's a lot of free blogs available for everybody here. And this one, Keys for Success. Don't trade, observe, okay? How many times do I say this, guys? Some days, it's good to not just trade, right? It's good to just observe and look at how price action is moving. Pick your favorite security and just study the charts for a couple hours a day, right? Without even taking a trade. Do you guys understand what I mean by this? I will read this to you, and I hopefully that it will maybe set an alarm bell for somebody. I know it won't for other people, but maybe someone can actually listen to what I'm saying and take this in and understand why I'm saying this. The way how I learned how to trade was not just by live trading and taking buys and sells and buys and sells and buys and sells and keep losing and not learning. I learned how to trade by taking time off of trading, taking a buy and sell, hitting the button, but actually doing a top-down analysis and just sitting back the entire day and just watching how price action reacted at these levels. What is a fake out? What is a breakout? What is an FU candle? I kind of hypothetically said maybe I would buy here, then what would have been the results if I used a stop loss and this and that. And you get to see patterns. Then you get to recognize how things are moving. Then you can get more confident when you actually start to go into the markets and then you're trading with real money or a prop firm or whatever it is you're trading with. But just take your time to observe, right? There's nothing wrong with this. So let me just read this real quickly. Observing charts without actively trading them is crucial for beginners. So I'm saying this if you're a beginner. If I was a beginner again and I was starting day one, after everything I've learned, all the mistakes I've learned over the years, this is how I would go about it. And someone might be here 5 years and still struggling. Well, then here's some advice for you too. So this is not just for beginners. It's to develop a solid understanding of market dynamics and technical analysis without getting emotionally involved and panicking, but actually studying what's happening, okay? And then I promise you, you will learn more that way without panicking, and to actually watch what's happening without having money involved in the game, okay? Because as soon as you go and draw down, you're gonna throw everything out the window and you're gonna forget about everything. So this practice allows learners to identify patterns, okay, pattern recognition. What do we talk about every single day? Trends. Is there a trend? Can we trade with the trend? Look, observe. If you were to buy the pullbacks on an uptrend, would you have been successful that day? If you're counter trading the trends, look at the counter trading moves and see what you would have done. Is it just a little counter trade like yesterday where I took that one for 50 pips and I did a mistake not taking out any profit? But if I have counter trading rules, that's how I learned counter trading rules, because I was observing what happens in a counter trade on an uptrend, right? And key indicators in a risk-free environment. That's what I mean, risk-free. You're not risking anything to learn and observe when you're not trading an account, just watching. And someone's gonna say, Ron, that's a waste of time. Why would I wanna watch when I can be trading? Okay, that's fine, that's on you if you want to, but I'll debate you on that. What's the point of just trading live when you don't know what you're doing, and then you're just losing money day in and day out? Then you're just wasting weeks and months of just pissing away your money to the market, where I could have told you if you spent 3 days just watching and learning, you could have eliminated losing all of that money in maybe 1 month worth of losing in the markets. So this is, guys, you gotta put your foot down one day and do this. If you don't, I'm not going to convince you to do this. I'm not your father or anything like that, like to tell you what to do. But this is a good practice. And for those that are taking this serious by observing the charts and learning, they're going to be so much better off than a trader who's not doing this, okay? And this is just my personal opinion. Some people probably have unsubscribed and probably off the call right now when I'm talking about this. It doesn't matter. I don't care. I'm here to help traders. I'm not just here for live signals, okay? That's not what I do here. I do enough live trading for myself, but I'm here to help teach if you want to really learn how to do this and do this for the rest of your life. That's what I'm here for, okay? If you want those live signals and live trading, we do as much as we can live, but that's not only what we do here, okay? So if you're still here and you're still subscribed and you're still listening to me, you guys are the ones that are going to do really well in the new year coming, okay? So this is a good time to do this during the holidays, right? The markets are still moving. Yes, there's less volume, but you can still watch what's happening, okay? So in the risk-free environment, enhancing your analytic skills without the emotional stress of financial loss. Very important, okay? Anytime we got money on the line and we're losing, we're not focusing on the learning process. All we're thinking about is, shit, we just lost money. How am I going to recover that money? And then you forget about the learning, okay? By focusing solely on observation, beginners or any trader can gain insights into how various factors influence market movements and refine your ability to predict potential outcomes over time. So you might start to see, okay, observe. Maybe they take out the highest liquidity of the day, and then there's a market reversal. But now you might see that today and you might see it tomorrow and say, okay, now I'm starting to recognize this pattern. Now when it comes to highs of the days, maybe I'm not going to be inclined to buy the high of the day. I might be looking for a liquidity sweep and maybe a reversal. But that's how you got to observe these things. Over time, when you start to see these things happen, then you're going to develop a little bit of a playbook in your own mind, in your head, and you're going to see these patterns. You're going to recognize these things. And then you're going to be able to hold off and say, I recognize this pattern. I've seen this before. I know how to trade this. So those are the things, and without just jumping and rushing and saying, do I buy, do I sell, what do I do here? No, you're going to have a systematic plan designed where for every kind of option there is in the market, you're going to have a playbook. That's just from observing. I do mental observations. I used to write down a lot on a piece of paper with a pen, but over time, now it's all stored in my head. I can do this without even writing things down now because I've been observing for over 20 years now. So moreover, it encourages patience and discipline. A lot of you guys are lacking patience and discipline. How can you learn? I can't teach you patience and discipline, but this is how you can teach yourself to be patient and disciplined by waiting for high quality setups in the market, not just trading anything. Okay, essential traits for any successful trader by shifting the focus from immediate profits to long-term skill development and strategy formulation. So let me just take it a little further and open up this blog and read it to you guys. So for a new trader or any trader, the importance of learning to trade by observing and not just participating in the market cannot be overstated. Here's why. Number one, understanding market dynamics. Watching price action helps you understand how the market moves. Observing how candlesticks form. The candlesticks have a high, an open, a high, a low, a close. I always talk about ignited open. What does it mean? What does a wick mean? What does a short wick mean? What does a long wick mean? What is an FU candle? What do all of these things mean? There's got to be something because the market reacted and opened and closed and you got to observe what's going on. So how they open, how they make lows and highs and close provides insight into market sentiment and momentum. So sometimes just watching how these things develop, you learn so much as opposed to just actively participating when you don't even know anything about price action. Okay, so I'm telling you, this is the blueprint for success, and some of you guys are actually learning the proper way how to trade. Others are not, unfortunately, but I want to get you guys on this path. So number two, identifying key levels. How do we identify key levels? You think we just pick these out of a hat at the end of the day and these are our key levels? No. Support and resistance levels are critical as they represent significant psychological points where price tends to react. That's why we look for points of interest on higher time frames. We look for points of control. If you want to observe, if you were to do a top-down analysis today and just observe how price action reacts at these zones, you would learn a lot. You would see, maybe you figure out a bullish point of control and then you see volume, bearish volume coming right into there, and then it bounces right out of that zone with buyers, and that could strengthen your analysis and say, hey, I identified this zone, I waited for the volume to come in there, and my bias was to buy out of this zone, and then I saw it came right in there, it picked up the pending orders and just flipped right out of that zone. I could have taken that buy and see how much drawdown would have been realized at that location. And this can help you set your risk management rules, what lot size to use, how much room you're giving it to breathe. All of these things can be learned by observing. Okay? Understanding how these levels are formed and tested is crucial for predicting potential price movements. You'll see when we do a top-down analysis today. Recognizing patterns and scenarios. By putting in hours on charts, you become familiar with common scenarios like breakouts, fakeouts, and retests. So you're going to see what happens. You're going to observe. You're going to watch a fake out. You're going to watch a break and a retest, and you will see exactly what happens. And this can strengthen your decisions when you're actually ready to start trading. This recognition allows you to anticipate possible outcomes and plan your trades accordingly. Finally, avoiding impulsive decisions. A lot of us are, as traders myself, I make a lot of impulse trades, a lot of impulsive moves. I try to control my impulse urges as much as I can, but I'm a scalper, so it's very, very difficult for a scalper because we're trading 1 minute candles, 3 minute candles, 5 minute candles. So, you know, there's a lot of quality setups that are presented, but sometimes even to wait 30 seconds for that 1 minute candle to close can save a lot of drawdown. So, you got to all of us, we have to try to avoid impulse trading. The best technique is to tell yourself, I'm waiting for this physical candle to close on your time frame. And if it's 1 hour and it's 55 minutes in and you're thinking of taking that trade, but you're an hour, you need to physically wait for 55 more minutes till that hourly candle closes. If not, then you got to start dissecting that hourly candle, going into the 30-minute, 15-minute, 5-minute. Look for your setup that you like, and then hold it for the duration of those 55 minutes if that's what you choose to do. Okay? Just like a 5-minute trader has to wait for a full 5-minute candle close, same with an hourly trader, same with a 4-hour trader. So if you're trading on 4-hour candles and you're more of a swing trader on the daily, you need to physically wait for that 4-hour candle to close, because if you go in prior to it closing, you are trading an impulsive candle that has not closed yet, okay? So it's very important that everyone understands this. And if you do take the trade prior to it closing, you have to understand you're taking it on impulse, and you can't be mad if you get stopped out, okay? You can't get pissed off at yourself. You are taking the trade prior to it closing. We have no idea where it's going to close, how high it will go, how low it will go, where it will close. So you're taking that gamble if you're taking it on impulse, that anything can happen. So the only thing that you can basically do on impulse is trading with proper risk management if you do get stopped out. That's it. And we have traders who are gambling, and they're impulsive trade gamblers. So you're putting like every single negative you can think of and trading the markets. That is like worse than a gambler. Not only are you gambling, but you're just not even waiting for a candle to close to take a trade. So you're like really compounding the gambling game. So some traders are doing that, and they're wondering why they can't be successful, or why they can't be consistent. There's your answer. I know it sounds pretty shitty. No one wants to hear it, but that's the truth, okay? That's the truth. Sorry, truth hurts. I wish someone was telling me this when I was gambling years ago in the markets myself. Impulsive trading, okay? Watching rather than trading hones patience and discipline. Helping you avoid poor decisions based on emotions rather than analysis. Developing strategies. By watching and observing candlesticks, charts, price action, you're going to develop strategies. Observing different setups, such as high probable trades, helps you develop and refine your trading strategies. You learn to differentiate between good setups and those that are less likely to succeed. And finally, risk management. This is across the board. Everybody should be managing their risk. Understanding how liquidations work. So, when you're getting stopped out, you are basically getting liquidated out of that trade. Okay, I get liquidated out of the trade, but when I get liquidated out of a trade, does that mean I'm liquidating my entire trading account? No, because I'm only risking a certain amount in that trade. We have traders I'm seeing on YouTube and our Zoom that are risking 25%, 50%, or 100% of their accounts to trade today, which is like, I can't even wrap my brain around that. But this is the problem. This is the problem with prop firms, okay? A lot of traders today are trading with prop firms. There's 90% discounts on them. They buy them for $30 and they go all in. They risk the entire account, 100% today to pass it, right? But you're learning bad habits, because even if you do pass the evaluation, the combine stage, whatever it is, the audition, when you go to a real account, that prop firm has rules, and if they see that you're not following rules like that, if you're just going all in, they're not even gonna let you advance or even pay you out. They're gonna see some type of flaw in the way how you're trading. So you're hurting yourself. And then if you learn those bad habits with prop firms, if you ever do eventually move to trading your own money, think about that. Look at all the bad habits you've learned, and then now you're not trading with a $30 or $50 prop account. You're trading with your own money, whether it's thousands of dollars, $10,000 or $100,000. Imagine risking all of your money on one day. It's just crazy, okay? So you got to understand, if you're trading a prop firm, make sure you have a prop technique, a prop strategy. But if you're transitioning to your real money, you have to have a real money approach to trading. They're two completely different scenarios, right? They're two completely different worlds from trading a prop firm and trading your own money. So you have to develop a proper risk management technique for both scenarios, but more so when you're trading your own money, okay? So You got to understand liquidations happen in the markets, and it doesn't matter how much capital you have. There might be someone on the call that's trading their own money with 7 figures and has millions of dollars. I guarantee you banks, institutions, brokers have a little bit more money and more liquidity than you, that they can margin call you and they can take you out. If you, just because you have more capital doesn't mean you're invincible in these markets, okay? Everyone can get liquidated. So you got to trade very smart, okay? So that's a good little blog, guys. Keys for success: don't always trade, observe. This is what we're going to do, where we go to the charts, we're going to start observing. Like right now, if I wasn't trading, I would be watching what is developing here, what's happening right now. I would mark my zones and watch. Maybe I place an alert to see if it gets up there. If I was looking to sell up there, would it actually happen? Would there be a break? Would it be a fake out? Would it be a candle closing above, retesting this, and maybe I buy that? So all of these things, you know, like I already have the scenarios in my head, but when you watch it happen, where you're not getting emotionally involved and you don't have money back behind it, you will actually learn more. You'll learn more, okay? And then finally, guys, just thank you guys for all of the subscribes. Thank you, guys. We hit 89,900. Hopefully on this call, we can get up right up to 90,000, and we're on our way to 100,000. So we owe it all to you guys. You guys liking the channel, you guys subscribing to the channel helps motivate us at SST to continue to be here. We're going on our 6th year on YouTube here. Basically every single day, Monday to Friday with you guys. Not only do we do private, but we're here with you guys on a daily basis. Giving back for free doesn't cost you guys anything. Cost a like or a subscribe, right? That's all it costs on YouTube. But if you do want to take it to the next level, then you can join our program, and then you'll get more hands-on, not just with myself, but with Dave and all of the other snipers in Discord. Then you get the education, you get the mentorship, everything available. And someone's going to say, well, Ron, why is your private not free if YouTube? Guys, no one gave me anything free in life. If I tell you how much I paid for the Toronto Trading Academy and all of these other courses I bought into, those trading academies were multi-million-dollar academies. Why did I have to pay $5,000? Why didn't I go to them and say, why didn't you just give me this for free, right? Everything in life has a cost. If you think life is a charity, I'm sorry, it's not, okay? So this is this puts a tuition on you that you're going to work hard in life. Anything I pay for, I know it's my hard-earned money, I better utilize that. So if I'm paying for a course and I'm paying, if it's free, you don't take it as serious. If it's with a little bit of money attached to it, then you're going to take it a little bit more serious, and maybe you're going to watch a webinar, maybe you're going to watch a tutorial, and maybe you're not going to half-ass your job here. Okay? If you don't want the course, no worries. You don't need the course. Then just stick on YouTube. That's fine. It's no sweat off my back. If you don't want our course, no issues. Okay? So right now, we're going to get in. We're going to start off with gold on the daily. Okay? So I'm going to get off on these 5 minutes. I'm going to start a top-down analysis. So basically, let me just call you out here. MN Sotaway 2035. You just wrote on YouTube, we don't want your course. Okay, that's fine. But what I'm doing right now is basically a course. This is a top-down analysis course teaching you this. So if you don't want this right now, you should unsubscribe from the channel right now, because what I'm doing is a free course on top-down analysis. So you are a person that doesn't need a course. So you don't need us right now. So why are you still on this channel? That's what I don't understand. I lost 2 trades yesterday. It happens. It happens. You're going to lose trades. I'm sure that you lost 2 trades too in your lifetime. It's all good. It happens. At least I'm transparent about it. Okay, so we have an all-time high up here on gold up here. Okay, and you can see right there, this is now my all-time high supply box, bringing it across. Okay, gold it's slowly creeping up there. It wants to get up there, but it hasn't got up there yet. Okay, and then do we have a nice bottom right there? There's a good bottom. So I have identified now two solid zones, an area of supply and an area of demand. You can call these blocks whatever you like, doesn't bother me. Okay, now I want to start to analyze what's going on inside of here. Okay, so there is, from this block where it started to build, there is a little bit of an uptrend continuing to move up on the daily. So you can see when we came down from this big move right up here, sorry, let me just change these colors. Okay, so when we came up right to the all-time high and we pushed right down, see there was a double bottom right there. The double bottom came back up, but it came right into that point of control of this big bearish candle, and they rejected it back down. Did it come all the way back down to this green zone? No. So it kind of held right here, and it built its way back up last week, and kind of got rejected, pulling back. But we're still holding above 50% of this blue candle. So is it going to continue to move its way back up to this all-time high, or is it going to come back, test this daily trend line, maybe possibly break? There's good support right here. It could test in there, or eventually come all the way back down into here. Okay, so what we got to continue to do is analyze from this bearish candle. Like, I do this every single day. So normally, if I was not trading with you guys, and believe me, sometimes I need a break from YouTube like I did yesterday, because sometimes YouTube gets on the people on YouTube sometimes get on my nerves, and I can't take it too much, especially to do 2 sessions in a day. It's too much. Like this, like with this gentleman right now. You understand? Like, I'm doing this out of my heart for you guys, to help you guys out, and then you still get shit talked by somebody. So it just shows how much of a piece of shit person that you are. Someone is trying to help traders, and then you got a piece of shit on the call just talking shit. But keyboard warriors, say that in front of me, in front of my face, and we'll see what type of situation we would have there if you would say that in front of me in my face. So I know some of you guys appreciate what we do, but others are just a bunch of losers. I know, guys, that other live YouTube channels pay people like this person to come on here and frustrate us. I know it's the game that plays in this type of industry, what we do, but it's all good, okay? It's all good. I just like to call you out when you do it, because you are a loser, right? You are a loser. You're taking time away from others that really want to learn how to trade, and it just reflects on you. But you see, guys, now I figured it out right here. So if I really wanted to continue to make my charts look fancy, I can write on here that this is the bearish point of control on Tuesday, October 21. So I know when we're trading in here, I could have a little note on the side right here letting me know that this red zone is from this candle right here. And I would keep this the entire week, these charts, and I would just trade this, okay? I wouldn't be deleting all of this stuff every single day. The only reason I do that is to help educate you guys. But next time, maybe I'm not going to do this. I'll just come on the calls. I'll already have my top-down analysis done, and then we just get into it, and I'm not going to explain where I got these levels from. I'm going to assume that you guys know where I got them from, okay? But I really like this part. I really like teaching so you can learn how to do this for yourself. But some people don't. Okay, so then you got to kind of look. If we were still observing, do you observe a bear flag right there? And what were the results from a bear flag? It's got a high probability it's going to continue to go to the downside. So there's your bear flag right now, like how we're observing. You can see right there. The market kind of consolidated. It did come up. It did come up. It did come up, but they're all lower highs and no blue volume closed above there. Then they continue, and sellers pushed it down. They pushed it down, pushed it down. Those 3 days were really, really difficult to trade gold because it was just trading sideways. And then right here on Monday, when the new week opened up, they redistributed it down. So similar with this candle, if I was finding 50% of that big bearish candle, all it takes is to cut it in half with a yellow line, and you can see how that yellow line, when it came down the one bottom, came right back up. Where did it get rejected? Right at that halfway point. And what were the results? It came back down. Right there, the sellers should have broke that level. That's where gold would have been bearish and continued to drop down. But you can see how it held and it came back up. Here's the second leg coming up. And look at it. Broke right through there. And then now you got daily volume closing above. right? So this same yellow line now, so if you didn't buy this day, you didn't buy that day, you didn't buy up there, and you didn't buy up there, it eventually, look, it rotated all the way right back down. And look, you could have bought again right at this yellow line. And if you did, it kind of consolidated, and then we continue to push right back up. So there's good support right here. I could draw another green zone right at this area right here. How would I do it if I'm not using the Fibonacci tool? I'll tell you another technique. You could look where those bodies of volume are, right there, go the same exact distance below, make it green, and there's your zone. You see how I did that without even using the Fibonacci tool? And you see how it's a little bit above that, a little bit below? I guarantee you that's the point of control. And how did I find that? Just right there. You see a body and a body. Bring it down to the point of interest, the yellow line. Same distance above, same distance below. That's how you can do it. And then you stretch that. So you see I have another supporting zone right there, okay? And then now we're going to continue to follow this going up. So each one of these nice big bullish candles that closes above, let's place a point of interest and cut it in half. You can see that there's a little fair value gap left between there from that wick to that wick. Again, opening price, closing price, 50% right there. Okay. We haven't came down to this yellow line yet. It came close right there, but then went right back up and turned ignited again and continued to push up. Again right here, I could find 50%. I see we already tapped into it, but right there is cutting it in half, okay? And then continuing, look at it, just another bullish flag, continuing this big breakout Friday. Then we opened Monday where it came in this red zone. They pushed it right back down, closed there. Yesterday we opened, came up, lower high. It was very bearish yesterday. It came all the way down, but when it came down into this little pocket here of this volume, the buyers were still there and they pushed it right back up. But notice how the body of volume on the daily did in fact close below the red zone. And then today it opens, so let's figure out our closing and opening price yesterday was right there, 4,205, and it was initially bearish where we came down and we made a low of the day. So that's our low of the day right now. There's a purple line, 4,195, and then we came right back up to the opening balance and buyers were strong. Look at it. And look at where the highest point of the day is. Right again at that yellow line. Okay, so if I flip this yellow to a purple line, it is representing today's high of the day, but it is exactly 50%, that same area. So it got rejected there. There is sellers sitting there pending, absorbed, and they filled those orders of all of those buyers, and now they're currently pushing down today's daily volume. So if this was like a 5-minute candle, will it come all the way back down to the opening price and flip bearish and fill that wick and start filling yesterday's wick? Okay, so yesterday's wick is a point of interest. That's how low it came yesterday, and it went right back up. And then you see now this yellow, and then you see where the volume is kind of trapped right here. This is where there is a little bit of a supporting zone right there in the market. Okay, I can go another green zone right there. And you see how I'm building like the blocks above and below, and now the volume is just kind of trading inside here. So it could continue to come up, but we got to break through there, then we can fill that wick and we're at the top of the red box and maybe break a little higher. But if we start going down, it could start filling back down to here. We'll see if this zone can hold. If not, we're coming back down, maybe testing this 4,100, and we'll see if that holds. If not, top of the green box, again, same shit. Okay, so this is how it looks on the daily. It is coming up, it's building higher lows, but if you want to draw like a current trend line from like here to there, you can. That's what we've got on daily. Now bringing it into the 4-hour. This is the 4-hour move. Okay, so 4-hour previously came up here. You can see November 13 came all the way back down. 4 hours kind of built the second bottom right there, broke out, continuing to be bullish. And look, now they produced that higher high. They got up there, but then it didn't last long, and then it got rejected, came back down, and then this is where it was really choppy. This was Tuesday. Europe, bearish. And then we started New York, bullish. Came back into 10 a.m., bearish. And then it went back near the end of the day, bullish. Here's the new opening of Tuesday, bullish. Here's where we went from futures to 10 p.m., bearish. And then here's London, came down bearish. Now we're slowly, guys, this is not good 4-hour volume. You know, this is just barcoding, bearish, bullish, bearish, bullish, bearish, bullish. So the 4 hours are accumulating. They've been accumulating for 2 days now. So eventually maybe they're going to redistribute back up here. But sellers are also accumulating where they could redistribute it back down into here. So today there was a little bit of volatility at 6 a.m. Gold opened, you know, it's still holding the lowest point of the day, came all the way up. So I can see that's when we tapped into highest point of the day. And then it got rejected. And then now our 4-hour candle just opened up. Now it's 2 hours, halfway point. It opened, came down bearish, higher low, came back up. But that's a big wick to fill. Again, those are small wicks to fill. So when that opened, why did it not fill that wick and continue to go? So that's where you got to question yourself. That's where observation comes into play. Look at the size of those wicks. Ask yourself, how did that 4-hour candle off of all of this momentum not open and just take out that wick and drive? Because there's a huge seller saying it's not happening. It's not. And then they brought it right back down. So there's your leg that came down. And then when it came right through here, it was very bullish. But look, we're not even continuing to fill that wick because it's got a lot of momentum to fill that to break. So, and it's in a big daily red zone. So there is still sellers here offering. So we don't have the greatest 4-hour candle. It's kind of indecision, and we're coming out of a very, you know, consolidated area. So if we go into the 1 hour now we can see more specifically where this big Tuesday was a big sell-off. Then it came right back up, right through there, and then kind of closed above and went right back down. Oh, and guys, you know when we were trading yesterday where I was looking to trade that hourly point of control? After the call, I know some of you guys are not going to believe me. Doesn't care. I'm not here to prove anything to you guys. But I did take that sell on that candle down for 100 pips, and I got out on that one. It came right in there, and then those 5-minute candles came down right in there. But then it eventually started to go right back up. The hourly candle closed above that and then continued to move up. So right now, what do we have? 8 a.m. COMEX was, and there was North American news here at this time. Gold was very bullish. Then at 9 a.m. we hit the highest point of the day, and a big bearish candle came down and engulfed it and closed below. This 10 a.m. came down, came right back up. So you can still see, I can draw now, cut that hourly bearish candle in half. I can figure out where's the halfway point and just draw a white line to let me know on the lower time frames where my hourly resistance is. It's right there, white line. Okay, so that's my hourly resistance from this big bearish engulfing candle that came down at 9 a.m. And I can see that buyers bought right above it. Okay, so a little bit higher. If I did my zone, I would have caught that. And then got rejected back down. This hour opened up, came down, higher lows. So there is buyers still supporting this move. And now we're touching the white line and they're getting rejected again. So that's a lower high, still a big bearish engulfing candle coming down. So, you know, there's still sellers active in this block here. And you can see how they're still pushing down the hourly buyers. So this could flip and start moving back down bearish to the lowest point of the day, or to at least this yellow line down in here. So if we go into now the 5 minutes, this is what we got going on. Look at that nice visual double top at that 50% marker and today's highest point of the day. So you see it came in 9 a.m., went right back down. There's the consolidation, the neckline, right near that hourly white line. And then it kind of built its way back up. There's 9:30, like clockwork. I was telling Justin the other day, look at 9 a.m. it comes up. You know, sometimes you're in a buy, and then 9 a.m., then they spoil it and bring it right back down. Okay, and then look at when this big bullish candle started, 9:30. Your 30-minute, your 1 hours came right up. This is Wall Street now, and then tapped right there again. The second top, did it break? No. Then it came right tumbling right back down. And then now it's coming right back up. But you see, it didn't really materialize above that hourly white line, just lasted a little bit, then they brought it back down. Kind of consolidated down here, came right back up again. They rejected it back down. So now we're pushing down. So you can see, like on the short term, the 5 minutes from this highest point of the day, the second top, it's technically like pushing down still. Okay, so if I just use a red line, so I just plotted it from point A to point B and extended it across. So that looks like a little bit of a fake out there, and volume is still below this descending triangle. It may, in fact, continue to push down. But do I have one black candle that's closed below this red zone? No. It came down there, went back up. Came down there, went back up. Here it broke, went back up. Broke, went back up. This one broke and went back up. So again, we might get another impulse drop and go back up. So let's see if we can, what will happen if we get a physical black candle that closes below here. Or we might be producing against support and another leg coming through here where we could maybe look for buys. But even if we just cut this bearish candle in half, it's got a lot of volume, you can see that we're still below 50%, okay? Even if I was looking to buy off the bottom here, we're still below that trend line, still got to get blue volume, maybe to close above 50% of that, maybe to retest this in order to move up to that white line again. And if it breaks out of there, these 5-minute candles broke out of there, and they're telling us that's how high they went. So we got now some scalp levels on our charts. Okay. One other thing we can do is add the SST indicator, daily bar. See now, usually I have it on the daily, but now I'm just going to place it on the hourly. Okay, so we can see how the hourly candle is moving. The hourly candle is not the greatest candle. I can see how it opened. It was initially bearish. You know, what hour? 11 a.m. So I can see exactly right there where it opened. It was initially bearish. That produced the wick. Then it came back up. And then that's where it hit the highest point right there at 11:35. And then it's been rejected back to the opening balance. These are these bars bringing it right back down. So our hourly bar is a bearish pin bar, still pushing down. And we've got 8 more minutes to go on the close of it. Okay. And if we add some EMAs, we're below the 9 EMA, and the 200 EMA is sitting right here below this block. So this is a lot of times where it will come down, just like that candle came down, touched it, and went back up. So you got the 200 EMA. You know that that's a strong support. It's representing 200 of the last bars. So showing still support. Okay, we might have to see a black candle close below that purple line in order and use it as resistance. And maybe then that will be that push to the downside, okay? But it could find buyers here and bring this thing right back up. So maybe we wait for the new hour that's going to start in the next 6 minutes, 7 minutes. Do you guys have any questions about that analysis? Like, did I break it down properly? Do you guys understand where we are? Like relative to the zones now? All good? Okay. So this is an impulse break right now. You see the sellers are impulsively breaking it down here. Okay. If you're in a sell, that's a big move, okay? And if you are buying, you see what can happen, okay? If we're observing right now. Now, we have a daily yellow line down here, okay? That's a yellow daily point of interest, 4,205. So I can see when it came down there, it came down, it wicked off of there and went right back up. So right now we came all the way down there. Is it going to kind of wick and go back up? Or is it going to maybe officially close below here and we're not too far away from the lowest point of the day? Okay, this candle is now closing in 8 seconds, 5 seconds here. Look at the hourly candle now, how it's flipped into a shooting star. So there's the close. That's a big significant candle. If we cut it in half, right there. The next candle, short wick, opened, ignited. These are your rules now where you can learn. See what a short wick is? And it opened, ignited. So it's carrying that momentum off of that 5-minute candle, opening and continuing to drop down. Okay? So now we'll see. We haven't had a bar close below. So are they taking liquidity below this daily point of interest and it will reverse back up? But even if it reverses back up, you got to understand you're counter trading against the trend and that point of control. So it could just come like right up to there and then go right back down. Yes, it could break that, close above, maybe retest this and come higher, but it might not do this because it's still trading in this big red zone. You still have hourly resistance. You still have 5-minute resistance. So like while this is all happening right now, whoever sold the highest point of the day could be lowering their offers down right there. So you see how that held up, lower high. They could have been lowering their offers right now at the hourly. You see how that held up. So they're probably positioning pending orders also in the market to protect this area. That's why I'm going to make this a red box right there, because maybe they don't want blue volume to come back into this big daily red zone anymore. So even if it comes back up, it could get rejected there and go back down. So what we can do is we can wait patiently to see what happens here. This is part of like the observation where you can place a line in there, place an alert in there. So if the volume comes up there at some point today, we will see the reaction it gets in there. That's how you can learn, right? Okay, so this is coming down, again, ignited all the way down. Now we're approaching the lowest point of the day. And this hourly candle will be closing in the next 3 minutes. Will we get an 12 p.m. kind of a little sympathy rally to the upside and be bullish? Why don't we watch and see if they're going to take out the liquidity down here? If they want to do it, they can do it. This is the time to do it, where they should basically sweep the lowest point of the day, take out all those pending orders and maybe move it back up, or maybe early 12 p.m. That might be the next candle that comes and takes it down. Do you guys have any questions about this? These are big candles, right? You look at the size of them now. This candle, the previous one, 100 pip candle. This one right now, from the open to another 100 pip candle. These are 200 pip candles in 10 minutes, okay? And if you were buying and you were over leveraged, your account has probably done some damage to it, okay? So right now, if I'm looking to take a trade, I'm already thinking in my head, holy shit, these are 100 pip candles. You know, you gotta, if you think you're gonna trade with a 20 pip stop loss, 30 or 50, you might get stopped out. And you gotta understand what size you're using, what position, all of these things. This is now the time to consider these things prior to taking a trade. And even if you take a buy and it moves up 50 to 100 pips, you got to know you're coming right into bigger sellers and they could bring that thing right back down. So you're counter trading and getting 50 or 100 pips on the upside. It's like a gift from the market. So you got to have counter trading rules, or take your stop loss, go to break even, or scale out, you know, because there's a lot of volume up here. Okay, so did they take out that lowest point of the day? Technically, they did not. Okay, that wick is above that purple line. Okay, so if we're talking technicals, they did not take that out yet. So the lowest point of the day is still holding up. Okay, this candle is now closing in 45 seconds. And then you're still closing below a yellow daily point of interest. So that could be resistance going forward on the next candle. So even if it opens up blue, it could get rejected there and continue to push down. So if I'm just marking like a little zone right by that yellow line, could be right there. If I want to, maybe if I want to continue to sell with this, or maybe buy above this, got to watch what happens here. Okay, so this is now noon. This is a new hourly candle. You can see right here. This is the open of this new hourly candle. Okay, so it opened. You might want to come back up and retest this. As soon as it came up, got a wick, so it's still holding. So if you buy this, yeah, you could buy a nice bullish candle, but it could also come back down. Okay, so let's see what happens. Now it's coming maybe to retest that location up here. And if you want to be a scalper, like just a minute scalper, just right there. As soon as 12 p.m. open, you're up 30 pips. You could be out in 1 minute right here. If you're a 1 minute scalper. There it is, 11:58. 59 already did the retest. You opened at 12. You're in a 1 minute, 30-second scalp. So the 1 minute candles made one bottom. They didn't take out the lowest point of the day. They might need to come back down for that second bottom. So even pattern recognition on 1 minute. You're still watching in there. 5 minutes is still building. It's got 4 more minutes to go. Has not transacted into that point of interest as of yet. So it's building a little bit of 5 minute support right here, right when noon opens. Now we're transacting right into there. So let's see what happens. Observing, right? So it came right in there. There is a seller there that's produced that wick on that candle, but this is still candle filling up with blue volume. This is our hourly candle, so it's strong. It's an hourly candle, okay? But remember, it dropped almost 300 pips if you calculate 1, 2, 3, 4, 5 black candles. So even this coming up, like I said, 50, 100 pips, it could come up and then they could push it right back down. So, you know, it's kind of deceiving when you see this, but it's nice if you scalp that and you got in and out. That would be perfect. Okay, so you see now the reaction. We are observing what happened to those buyers when they transacted in there. Okay, you also got to look at the time on the candle. There's still 2 minutes and 40 seconds. So that is a rejection. The wick is right at that yellow line. That's telling me that there is some daily sellers there at that daily point of interest. Okay, I know it's still early and the buyers could close it above there, but they're transacting in there right now. And it showed me that there was sellers that pushed it down, but as it came down, buyers are asking to trade back up there. So this candle is still bullish. It hasn't lost its momentum. So now they're pushing it above this level. And again, when it came in there, this is the second time now they've rejected it back down. Okay? So you can see. That's the second rejection. So when it comes back down again, this is when it built its way back up and it came. Let's see for the third time. Is it going to build back up and get back up there and break for a new higher high? Or what's happening? But you see how all of these transactions are happening inside this little block right here? So if you're not in a trade, you're observing. If you're in a trade, then you got to know what you're looking for. Okay, so now again, a third time it refueled itself, came back in there again. Okay, this is the third attempt up there. And then look at the close now. There's 60 seconds. Who has momentum in this candle? Obviously the buyers. Okay, it's a no-brainer. It opened very strong. We saw 3 times they got pushed down, but they're continuing to manage to get the volume to the highest point of the candle. Okay, so that's showing me strength on the buyers. Now, can they finish the job by closing above and engulf that previous black candle right there? So the job of this volume is not only just to come up here, but to engulf this, because then the next candle could build momentum and continue to drive up. It might need to pull back, but that's why we'll figure out where 50% of this is. Okay, so now it's made a new higher high on this previous candle, looking strong. Look at the hourly candles looking nice and strong. 15 seconds to go into the close. And this is one bottom. So if we're looking to buy the second bottom, you know, we got to maybe wait for it to come back down. This is so far just like a recovery. Did it engulf? No. Okay, but the candle did open ignited, and right there when it could not take out that wick, that's kind of suspicious. How it couldn't take that out where it opened ignited. We're still trading in the red zone, so now it's kind of just a small doji candle consolidating here. But with that volume that closed above, this yellow line can act as support right now for this candle. So if it gets a wick and holds in here, it could probably break out and maybe have enough more volume to get up to 50% of that black candle. Okay, so you still see how it's kind of this small little doji candle still holding inside here. Notice how I haven't made this box green because the blue candle did not close above it. Okay, so sellers are pushing this thing back down right now. So if I was to look where's 50% of that blue candle, it's probably right there, like right where the zone, the bottom of the zone is. Okay, so you see now sellers are bringing it right back down. So will it come all the way back down to this point, or just stop at 50%, grab a wick? And you see how the transactions are all happening at this daily point of interest and this little red block right here. Okay, so it's still building. It's hard to say who has the momentum, but when it came down there, it's still respecting this bullish volume. Buyers can flip this and continue to take it up. And it's got a short wick, so it could possibly pop and start to fill a little bit, okay? And then also the hourly candle, as it came down, it refueled itself too. So maybe the hourly candle still has some momentum that wants to retrace back up, okay? And you see when it came up there again, that black volume still at that opening balance, they're still pushing it down, okay? And then are we flagging in here? Still sellers are present, there's buyers present, both sides are still accumulating in here. And then there's half the time still remaining on the candle. So there's still 2.5 minutes to go now. So this is this situation you got to ask yourself. If it comes back up here, are you going to take that impulse buy, which could break out and go up a little higher, or are you going to wait for this bar to close now? This is kind of the time you have to tell yourself this. Because when it turns into a hammer, you're probably going to buy. But if you give yourself some rules, you got it, like right now. You see how it's producing that hammer, and with 2 minutes to go. So you got to kind of feel with how the volume was moving. Is this the time to take it, right? If you feel it, go for it. But just don't overleverage. I'm gonna go for it. A buy. Sorry, buy. I hit the wrong button there. I'm going in a buy. Okay. I came in a little late, but I like the hammer. I'm in. So my goal, I'm not taking it all the way up there. Okay. You got to understand that. I'm looking to see if I can get to 50% of this candle, and now my stop loss placement. I could place it right below the wick right now, because I see it already came down there and it went back up. If I want to give it a little more room to breathe, maybe I want to be below the big bullish candle that started at noon in case it needs to come back down, maybe pick up that second bottom. So if I'm giving it more room to breathe, then obviously then my reward will be a little higher up in there. But first things first, if it can get up to there, I measure so I know what my distance is. Approximately 40, 45 pips. Then if it starts to get up to there, I will start reducing my risk. Okay, I don't need to leave it that open down there if it starts getting into here. Okay, and then when this body of volume closes, I have to follow it because I went in prior to it closing. So if it closes, it's made a new higher high, higher lows. If it closes above here, I will flip this red zone momentarily green to represent if it comes back in here. Maybe now buyers are pending inside this zone that could carry forward the momentum and continue to take it up there. Okay, so it just broke out for a little bit and got rejected back down. So now we got to watch where it will close. And also I look at the closing price relative to the previous high wick. If we close above, we could build off of this wick, make it support going forward. And you can see it's kind of representing like 50% of the volume, that wick, and where my cursor is. And here's the close now in 3 seconds. There's the close. So it did technically close above this red zone. So I'm going green on the zone, stretching it a little into the future in case this trade takes a little bit more time to develop. So at least we've got a block now created where maybe it doesn't need to come all the way down to this block. Okay, it might need to come back down and transact inside here. Okay, so now it opened, it couldn't fill that wick, so now it's coming back down now to attempt to see if we got some pending buyers now locating inside this block. And if we get more pending buyers accumulating in here, then maybe the offers are going to start to get pulled above us, and then they'll start getting maybe put in more premium areas up here. Then we can maybe just bypass this area and start to drive up here, okay? So now we could also see some consolidation. This could also be where the neckline is being created. So anytime there's a neckline, then I know that if there's a neckline, there's going to be buyers and sellers, then it has an opportunity to come back down. And it could come all the way back down there. They could, you know, go after my stop loss. Then I want out of the trade because it's too close to the lowest point of the day where it could just break down. Okay, so right there, it came back down, it retested. Okay, it was black candle, it retested, higher low. We have a nice candle now. Now the job of this candle, it's already retested, picked up some orders. Now we got to fill our prior wick, which we failed to do right there. And once we fill it, we could break and continue to fill up to the point of control of that big bearish candle. Okay, but you see right there, those highs that we didn't break through. Okay, that 4,209, see now that's like a wall on these 5 minutes. So that candle could not do it. So it came back down, picked up some more orders, and now let's see if it can bypass and break through there. Now is the time. There we go. So it created the new higher high. Now let's see if we can fill the distance right up to exactly 50%. And if it gets there, then I got to do something because I know I'm at least 40 to 50 pips in profit. Then right there, I'm going to start to now reduce my risk. Okay, I'm going to a break even now. Break even. Now I have no risk. Okay, and it's up 30 pips. So now I'm at a break even. So worst case scenario is it comes down and then I get clocked out at break even, but I have no capital at risk. And now it's doing exactly what I wanted it to do. I got a little greedy the other day because I waited for 2 points and then it hit me. So this one now I'm taking out 80% right there. 80% is out. It reached my target. Maybe not your target, but it got to my target. That's 80% is out. And I'm leaving now the remaining 20% with a break even to run as high as it wants to go. Ultimate goal, if it can continue to run, would be to trade at the bottom of that red zone. That would be approximately 67 pips. And if it can get right up there, it would be 80 pips. So I only have 20% running. I took out 80% there because I got to know that I'm still counter trading. Like, you have to realize that this was a massive drop, right? We are coming back up, but it could just come right up to there, you know, like right there, and then they bring it right back down. Did everyone understand that? Does that make sense? Okay, that's more robotic trading. Okay, that's trading to a point of control and doing something. It's not questioning what if this happens, what if that happens, or this happens. It's trading to a plan and not worrying about all of the other variables. Do you guys understand that? And this is just the one leg recovery. Okay. Because we got to be honest with ourselves. We know that this thing could come tumbling right back down, right? Is depending on how big these offers are up here. Now we have 60 seconds to go. So let's continue to watch this, where it will close, continue to follow the volume, continue to cut our bullish volume, and, you know, figure this shit out, okay? So what happened? It broke through there and got rejected. So I know that you know, I didn't do a point of control box. I just did 50%. I know that that's where that 618382 is. If I just did a zone, like right now, I know that that's a red zone right there of that candle. Okay, look at where it closed. 24 seconds. Let's see. Will it close above that 50%? Because if it does, we can make this 50% ongoing support going forward on the next bar. If we close near the high and it's a shallow pullback, we can get it and continue to break to the upside. If we close above this, then we know it's a strong close and our hourly candle is continuing fill. Justin, you see that hourly 12 p.m. momentum change? So those sellers got to know to close out their transactions right before the next hour, because you see how it flips right back up. So you see how it got rejected and closed right below that red line, okay? And this candle opened bullish ignited. So this candle's job with this ignited open right now is to continue to fill that wick quickly and break for a new high. If it can't do it with this ignited open, it's basically a failed open strong candle. So it's coming up. Let's see if it continues to fill and break out of here. There, filled, we got up there. It broke. I know there's a little tiny wick above there. So we could continue to fill to the bottom of that red box possibly. But some of you guys use indicators, trend lines, shit like that. So you remember that red trend line that I attached from point A to point B and it extended it? So we just got rejected at that trend line. There's that red trend line. The 200 EMA is there as well. So you guys know that that 200 EMA is like resistance, right? So there's the rejection and now it's coming down. So let's see now when it comes down into 50% of this big bullish candle. Will it continue to hold support here or a higher low? Will we get some consolidation in this block? Or are the sellers now going to bring it down? And that leg, that's all it lived for. That's it. And now the sellers are bringing it back down. Okay? So you see now how we came right into 50%, the cut line. Our buyers are still here. They're there. There's the wick. There's the evidence, right? And now we're right back to a spin top candle. Okay, so this is where buyers are buying, sellers are selling. Could be one of those indecision candles. It could be a candle cooling off the market right up here. And then it's allowing for orders to continue to develop above us, below us. The market is just catching its breath before the next move. That's what a flag is in the market. You guys have any questions about anything? And I apologize, guys. Sorry, I didn't get to say hello to everybody. We just got right into the chart. Justin, good morning. Trevor, welcome. Sergio, what's good? Welcome, guys. Danny, Mike, welcome. Jerish, all the way from South Africa, welcome. Thank you for joining. Kyle, Kira, thank you for joining, guys. Welcome, guys. Rachia, welcome. Thanks everyone for joining. And everyone on YouTube, sorry guys, I didn't get to give a shout out to the guys at the top. Full Dis 9699, welcome. You are the first. Rajesh, welcome. Justin again, thank you for joining. Welcome, welcome guys. Ice, welcome. Ice baby. Remember Vanilla Ice, guys? Trading upwards, you just passed your 100,000 FTMO prop firm challenge. Congratulations to you. That's a big achievement. Congrats. That's big. Good. That's what we want to see. We want to see you guys being successful traders. Tony Gold, welcome, Habibi. Thank you for joining, guys. I look good. Did I get some sleep? Yeah. yeah. I got some sleep. I took a break yesterday. Got a good workout. I went in the sauna. Then I went in the hot tub. And then I got some good sleep. Thank you for noticing. I appreciate it. Ron got some beauty sleep. I got a good 5 hours. Once in a while, you got to look beautiful on these calls, okay? I can't just be all about technicals here. Got to look good for you guys. Okay, so what did you guys, are you guys observing? You don't have to be in the trade, but are you observing? So did you see how all I did was cut that in half? Is there support there? Yes. Did we observe support at 50%? Yes. Is the candle still building with higher highs? Yes. Have we developed a bullish pin bar, possibly a hammer, going into the close in 30 seconds? Yes, yes, yes. So we still got to see if we can get, do we have enough volume to continue to get up to this big area up here? This is where that big sell started, and we're trying to retrace back up, all the way back up there. Where's full TP for if I get it up to that red box? Right in there. 4,215 is where I'll take out the remaining 20% out of the trade. Okay, so we did close, again, the volume closed above that red line right there. And you see again, the candle opened bullish ignited. Now we got two short wicks. So we got what we wanted. We got a bullish ignited open, we got short wicks. Here's the pop. So let's see now if we can fill right to the bottom of the red box, 42.14. That would turn into about 70 pips of profit. But ultimately, the point of control right there, right in there. Can we get it? Okay. But like you can see a little bit of the volume is starting to fizzle off, right? We don't want that. We don't want the buyers to get exhausted up here. We need one more good push, because all you do is when you get exhausted is more sellers are coming in from the higher time frame to prevent this from going any higher, and they're going to push it down. And that's where that elevator comes down, right? We cannot let the elevator come down because we're not getting big buyers asking to trade up here, okay? So maybe there's got to be a pullback, and then bigger buyers will be where we bought in or a little lower, right? But hopefully that's not the case, because as soon as it comes in here, it's still consolidating with this small doji candle. So it's right at this opening balance. So we got thin volume. All we need is a few good orders, and then we can continue to break right through here. We're producing higher high, higher low, higher high, higher low, higher high, higher low. And we are counter trading. So it's really, really beneficial if we get bigger volume trading up here while we're counter trading, because then we can go after bigger stops up here. All of these sellers that sold, their stop losses are above here or above this candle here. So if we can continue to build, we can start to make these sellers thinking about their stop losses. Just like when I got in the trade, I placed my stop loss down there. If it came down and I went in drawdown, I would have been thinking about my stop loss, right? So every trader has emotions involved in trading, whether you are a buyer or a seller. Guys, thank you. 350 viewers on YouTube. Hit the like button. Subscribe to the channel. If you want to learn how to trade proper every single day, join us. Let's see if we can hit 90,000 on today's session. That's 75 more subs if we can get it. And you see, guys, we're still trading basically in the point of control of this big bearish candle. Who will win the battle? And we're trading, you guys probably use these indicators more than me, the 9 and the 200. So look at the volume. It's stuck like a sandwich right below the 200 and right above the 9. So this is where you're going to get some type of sideways action. I hope it holds up here. It could be like a bull flag and then has one more leg to break out of here. But I'm not naive to understand that it could have that elevator coming down, right? I've seen it a million times, right? So that's why I'm not afraid to take out profit 80% at these critical levels, because then the elevator can come down and then you could possibly give away your whole trade, right? So this thing now has 90 seconds. Again, it broke for a high. We didn't get that big bullish move we wanted. So sellers are here. They pushed it right back down. But we didn't get that huge elevator coming down. It's got a higher low wick. So we do have a little bit of support, bringing it right back in. And look at now where the volume is trapped. Right in that point of control of that big bearish candle right there. So we got 30 more seconds going to the close. It's still respecting this trend line. We're still below the 200, below the 9. If it closes below here, this red box is still intact. So again, the previous buyers stepped in here right at 50%. Do we have more pending orders picking up here? Okay, so we got buyers again located right here. So that's good. It's good for us, but still got to acknowledge that that's a big bearish candle. Look at where it closed, kind of right below that red zone. So now this candle, if the buyers cannot build it, it's going to drop, fill those wicks, break this red line, and then come probably right exactly where I entered the trade, and it may become deeper. So if it comes down there, all I have is my remaining 20% at a break even. I will forfeit my profit on the 20%, but I scaled out 80% as we were coming in there, okay? So that's why I take out, that's why I have an 80-20 rule, is for those. I take the bulk of my trade out at a desired location. I don't worry about the woulda, shoulda, couldas that could have happened up there, because welcome to the world of trading. Nothing is guaranteed. But if I can make money and put it in my pocket, that's what I'm gonna do. I don't just come on the computer just to, watch candles. I used to do that, but now it's time to put what I've learned to test, right? But if you guys are learning, that's what that whole blog was. Observe what's going on. See, if I was observing this, you see that this block is still holding, right? So if you're looking to buy, you either got to wait for buyers to, close above here so that you can buy that right there, or you're waiting for this thing to come all the way back down, maybe down into here or down there to buy. You're buying at where more discounted prices are, down in here in this block or this block. There's a lot of pending orders waiting to buy in here and here. But as it comes down there, will it hold there? Will it go back up? And then will it be downtrending, coming back down, there's so many variables that I take from one block to the next block to the next block to the next block. I'm not a swing trader, so I'm not looking to take this trade into hold it till next Friday, right? Just to take it from here to that block. If I could get up there, perfect. Now you can see how it's coming right back down, and you can see that the buyers failed to do anything up there, and now it's coming right back down. I'll verbally let you guys know as soon as I get tapped out here from the break even. I have a little bit different levels than this FXCM broker. I trade with Fusion Markets, so my levels are just a hair different. There is a wick down there. They didn't tap me out. I'm still live down there. And then this is what happens when you go to a break even. If you don't want to go to break even, that's your business. I go to a break even to protect my capital. If you don't want to, you don't need to. You could have you could have still had a stop loss in the market. I'm not here to tell you guys where to place your stop loss. I'm not here to tell you guys where to take profit. I'm not that guy. I'm showing you how I trade, what I do as a scalper. You don't need to mimic what I do. I'm not asking you to do that. You got to come up with your own plan, your own strategy. For me, I have something in my head when I trade. My number one job is to protect my capital. Doesn't matter if I'm a scalper, swing trader, investor, anything. My job is to protect the money that I'm risking putting in the markets. It's not a prop firm money I'm risking. It's my own money, okay? So this means something to me. Like, I worked my entire life to build this capital, right? And I'm not just here to give it away like a donation to the markets. I'm actually here to protect it. So some days I don't get stopped out and I lose. Some days I get break even, but it's still protecting my capital. So that's why I do take out profit as it's moving up, because I'm building my capital, hopefully on a daily basis. And if I do get taken out of break even, I'm still okay. I know some of you guys get pissed off at a break even. I don't know why. You didn't win, you didn't lose, it's a lesson. But if I get stopped out at break even, I'm only risking 20% of my profit. The bag, I've secured up there, 80% of it. So that's what helps me. And I'm still in this, but I think that they're going to come down with that next momentum, come down and they're going to get me. Okay, so you see now where the volume closed. Remember that original red line? That was that 50% where it was support and support there. Now those sellers closed it below there. So this red line could be resistance, but this candle opened strong and broke right through there. And now it could be coming right back up. So I'm still in this. They never got me. My break even is just below here. So now it's building right back up. Okay. So again, now it's trading back into this red block, back at that 50% right there. So now what we need, this is a beautiful bullish candle, but we don't want just this thing to fizzle off, just come up and get rejected and go all the way back down. We want this thing to engulf at least this bar, maybe close above this red line. It would be amazing if it can come all the way and close above the zone, because then we could build off of this and continue to go up. So this is a great candle. This is what we need. But if we lose this momentum on this candle and the sellers reject it all the way back down and flip this, then you're going to see more redistribution, more black volume coming down into this block. Okay, so right now this is really strong. That was probably demoralizing for the sellers that it couldn't break further, but that's that wick. That's what I'm telling you guys about. See how strong that candle was, trading right back into that red block, and those sellers are there and they rejected it back down. So all we have now, there, we just lost that ignited open. So you see how it's in that shooting star candle? This is basically kind of those FU candles that I say. That was like a FU to all the buyers, and then boom, they slammed it down. So now they could come down with the momentum now, the volume, take out the previous wick. I will get stopped out at the break even, but it could go further down and start to take out stop losses down there from previous buyers, or trade into this block where patient buyers are waiting to buy in here, or maybe even lower. Okay, so you see how that loss of that volume, see how strong that bullish candle was coming? But remember, there's levels to this game. You got to understand that this is still a red zone up there. And then now when you're continuing to watch, now half the candle is exhausted. So I know that the first half opened was very strong, and then they brought it all the way back down to kind of the opening price, and now it's battling with the opening price. We have a little bit of buyers building, but it's very thin volume. Sellers could take this out and continue pushing down. It's a goat life. Can you re-entry? You can do whatever you want. I'm not here to tell you anything. You want to re-enter? Re-enter. Do what you want, just manage your risk. How about you wait for 90 seconds for the candle to close? Maybe it might give you a better indication. If you can't wait a minute and 20 seconds, you shouldn't be taking the trade. There's a rule for everyone to follow. See now it's coming right back up with buyers. So are they going to engulf that previous bar? Is it coming right back up? Maybe the momentum will carry into the next candle. Then maybe you can enter on the next candle. But why don't we just observe how it closes? And where it closes. It will give you more information than just entering in right now. You know what I mean? Just wait for a candle closure. Please, guys, let's learn that patience to do that. And this is our hourly candle. Normally I have it on the daily bar, but I'm showing us more the hourly time frame. Okay, so now we got 10 seconds to go into the close. So you know it came up again with good volume, and then it got pushed right back down. So let's see where it closes. How much blue volume relative to how much we had. It's got big, oh, look at that. Okay, so the sellers just brought it right back down. So this candle could open black and just push down. This is the type of setups I like to look when I'm selling, right? But I don't want to hedge trade. I don't want to take a sell where I'm still in a buy. So I got to wait for my trade to get clocked out here to see what I'm happening. But you see the momentum carried off of that wick, how it closed right below that red box, open black, and they're pushing it down. So it's got to continue to fill that wick. And as soon as they fill that wick, then I will be technically stopped out. because that's where my break even is, right under it, but there is a wick still holding. So will the buyers flip this back up and continue to break back above here? And then if you're trading, you're just trading in this zone right here. I would potentially be waiting for something up here or maybe down in here. Okay, and this is representing the first 1 minute right now. So it's still bullish, came down there, still holding. Okay. So if you like to enter on this candle, just remember, you got to continue fill up this wick, and then if you do, you're still trading into this red box and still below the 200 EMA. So yes, it could come up there. You could go up 20, 30 pips in profit, but then it could come up here and get rejected again. Okay. So if you want to wait, let's see if the blue volume can officially close above this red zone. Because if you take a buy now, you got to understand you might get pushed down. Okay? Just so you know. Because there is a lower high, you're still below that. You're below the 200. You're right at the trend line. There's still a lot of sellers here. But could be the leg coming right through here again. What I like to do is I like to add positions on winning trades. That's what I like to do. That's not hedge trading. If I add, like let's say I added a buy while I'm already in a buy, I'm just adding another position to my ongoing position, right? But it's where you're in a buy and then you sell a candle. That's not good strategy. Don't be doing that, guys, okay? If you want to add a position to a winning position, perfect. Stacking, whatever you want to call it. That's good. But you can see you were already in that trade. It pulled back. It's been holding. And if you feel like right there you wanted to enter, you're entering in on your profitable trade again, okay? But don't do this practice where you're in a buy and then you want to sell. Like then you got a buy and a sell. Because now if you took that sell, yes, it was coming down, but now it's back. Your original trade is in profit, but now your sell is in drawdown. So they basically negate each other out, and then you're just confusing yourself. So you either trade one direction and you can add positions. And that's a beautiful candle coming out of the gate there, okay? Wow, okay? So where will this thing close? So you see how close I was to getting my break even hit, and I'm still live. Doesn't normally happen like that, okay? So I'm still in this now. Now we got to continue to follow the regular schedule programming. What will happen in this big red zone up here? That red line more specifically, 4,215. Also, will this be the first bar that closes above this block? Then we can convert that one green and we can continue to move forward. So you see this red line? I just move it now down to represent the body, and where we held right there. So we have good support coming in at 4,209 on this move. And then I have it measured from where I entered all the way up there is 80 pips. Okay, so I could right now close my entire trade right now if I wanted. Or I hold off for another minute because it could close and we get extended. So I'm holding this, okay? I'm verbally telling you guys. I'm not closing my 20% out. I'm going to hold this thing because maybe we can build and go a little higher. Maybe we can get ourselves up to this point, 42.19. Okay, so I haven't taken out my remaining 20% yet. I'm going to follow this body going into the close in the next 30 seconds. Do I ever use a trailing stop loss? If I can. If the volume cooperates, yes. But when I'm scalping 1 minute candles, sometimes you don't have enough time to do that. But yes, if you get a good play, trail it behind at each level. If you can, whatever. But find what's your strategy, okay? Trailing stops is not my strategy. I use an 80-20 rule. I've verbally told you guys that now for 6 years now. Okay, big rejection right at that red line, okay? And now, did we close above that red box? Yes. So can I go through my motions, red to green, right? So now if we come back down, maybe now our green box can provide support. Our 9 EMA is there, our 200 EMA is there. It's coming down black. Can we come in here, maybe find our wick? So we got a nice shallow pullback at the 200 EMA at the top of the green box. Can we continue to flip our candle back up bullish and see if we can break this bigger red zone? See how it came right to that red line, and that's where those sellers were, and they rejected it down. That's where I said normally I should close my entire 20% there. I didn't on this situation because I feel like maybe we can continue to build ourselves and get out of here and maybe turn it into 100 pips, maybe 120 up there. Is it me being greedy? Possibly, but it's only 20% of my profit that I'm still holding, okay? It's not like my entire trade. But now we got to see. Now we're bouncing between this red block and this green block. This one weave is pending. It's getting stronger as we're speaking. This one down here is pending. It's getting stronger as we're speaking. You can see this, it started all at the top of this hour, right at 1 p.m. or at 12 p.m. right here. Okay, so came up, we retraced down, we held higher low. Now we're struggling right in there, and now it's coming back down to maybe retest this location. Okay, and then you can see like how there's levels to this game. You see how this is now the new red block that's holding up, and this is the one that started this big bearish candle. Okay, so that's where the majority of the bigger sellers are at the opening balance there. Okay, we came through that one at 50%. There was a little bit of resistance, came down, but thankfully we picked up higher lows and we broke through there. Now it's coming back to retest this, the point of control of that candle, but we flipped it blue. We've inverted it, right? Inverted it. So now is it going to display that there's buyers here? That's what we got to watch for. Did any of you guys do anything up there? Okay. Remember, originally we measured it was 80 pips up there. Did you do anything, or are you still holding? Have you managed your risk below? Are you still holding at, like, do you still have an open stop loss? Are you at a break even? What is your personal plan? What have you guys done? Have you guys done anything? Because look now, it's coming back down, right? So then this is where it's showing us more bigger sellers are in this block, okay? And it's a higher block, so obviously there's bigger sellers there, bigger offers, bigger orders, higher time frame. And then if this bearish move comes all the way back down and then, you know, eventually stops me out of my break even, then I go back to my journal or whatever and just say, why did I not close out the remaining balance there? Why? Was I being stubborn? Was I being greedy? What was the cause of that caused me not to take out the profit there? Then learn from it and learn so when you're trading the next day, you know what to do, right? Sometimes this happens. You want to hold for a bigger move. I understand. You're seeing it myself too. I'm trying to hold for a bigger move. I can't change the way how the candles are moving. All I can continue to do is observe. So they're coming now down into the green box. There is buyers there holding. Where will the volume close? I don't know until the next 50 seconds. It shows me right there that the buyers are there. So you see how the sellers came right through there. And then it got big rejected with wicks. That's showing me that there's pending buyers in that zone that got filled, but there's still this big bearish volume above me because it's still coming down. So it shows the strength of the sellers, even though we have our buyers here. So this is where markets can flag, trade sideways, accumulate both ways, where we could eventually get the bullish move, continue to break out, buyers accumulate more, or if sellers accumulate more, we're going to get that next leg coming back down. Right? So there's nice wick in there. It's exactly in that same zone. I haven't changed the zone. I just changed the color of it, depending if the volume is closing above or below. That's all I'm doing. And here's the close. Look, right at top of the green box. So this candle should technically open up bullish. The way how it moved off of that rejected off that candle, closed right there, should open blue. It didn't, okay? So it's still showing me that sellers are there. They brought it down with a little wick, and they're the buyers. Now they came in. So you see, we got a little bit of a flag now. Bullish volume, bearish volume. So if we continue to build this bullish volume, maybe we can attempt to transact back into this red block. So this is the time to do it, right? Where we came off of that rejection and we opened strong with this candle. But as soon as we came up, those sellers are pushing it right back down. So then it's got to go into a rebuilding phase. Hopefully we don't kind of lose our opening balance, and it still has buyers asking to trade up here, because as soon as we lose this opening balance, sellers will push it down and try and fill that wick and maybe extend it lower. So that's why we need buyers to continue to ask up here, build this flag like right here. And then maybe hopefully we can continue to break out bullish. A bull flag has a high probability of continuing to move to the upside. So here's our pole on our flag, that big blue candle. Here's our flag, and has a high probability of continuing to break to the upside. However, we are still counter trading, right? We're still buying against an overall bearish trend. So it's not easy to get this breakout. But while it's still building, we can watch and see if we get it. Okay, so there's our nice big building candle. Okay, now we just got to break through, fill that wick, but there's that upper red block up there. Do you guys understand that? Are you guys observing with me what just happened in that green zone? That was a big black candle, came there, picked up all those buyers, closed right at the top of the green zone. We opened strong with this candle. It's trying to break out of there, but there's a lot of resistance right here. But we have our bull flag pattern that we want as buyers. You know, when we're trading probabilities, that's a good probable setup as a buyer to break resistance, a bull flag. Timmy, I wish I was your elementary school teacher. Guess what, guys? I got accepted at my son's grade 9 entrepreneurial business class alongside with the actual teacher. Once every 2 weeks, I get to go in for 45 minutes and teach the grade 9 kids, my son's class, alongside with his teacher, all about like aspects of trading. So I'm super pumped about this. I'm excited, guys. Like, this is big. We can teach now high school kids alongside with his teacher. 45 minutes once every 2 weeks. I get to volunteer and help them, show them a chart, talk about this, maybe get them engaged, maybe to learn all about this. And it's exciting, guys. I hope it's a new generation of our younger generation learning how to be financially skilled in life, and teach other aspects in life other than just what they teach us in school, which is very important, okay? But there's other things. So shout outs to Mr. Atkinson, his teacher, that is allowing me to do this with him. So it's pretty cool, guys. I'm really, really, really excited about it. My son is embarrassed. He's like, don't embarrass me in there. I'm like, no, I'm not going to embarrass you. We're not going to teach them anything about money. Not teach them anything about how much you can make in the markets. Nothing. We're going to teach them about patterns, right? Patterns. Mathematics, probabilities. These things kids can learn. What do you guys think? Do you think we're going to break bullish out of here, or do you think the sellers are going to be here and bring this thing down? We're going into 1 p.m. in the next 10 minutes. So watch. It's like clockwork. Watch. If we can't break out of here by 1 p.m., maybe the 1 p.m. candle will come down bearish on us. Just watch and observe. Remember our blog today. If right here. Keys for success. If you're not trading, you're observing. watch what happens at 11 a.m., 12 p.m., 1 p.m. Look for patterns. Here was the big drop, and look at where the buyers came in, 12 p.m. And then watch at 1 p.m. what will happen. Okay, all of these things. This is how you observe. Okay, so you see we're failing. It came up there, back down. Now 1250, bearish ignited candle coming all the way back down. But now it's transacting back in our green zone. Does it have new pending orders waiting to get filled in there to respect this? If it is, we should see a wick in there. If not, we'll see a big bearish candle coming right through here. And then if it closes below here black, unfortunately, I'm going to have to represent that zone red, and then we could further come all the way back down. And that's as high as we're getting right now, is to 50% of that red block right there. You know where that's why I have these lines here for a specific reason. And then this is where you can learn to see, wow, we transacted exactly right at 50% there. So that's a big, heavy bearish candle coming down. So in this situation, the bull flag never played out. Why? Because I told you the overall higher time frame is bearish. Okay, bull flags work nice when we're in a nice higher time frame trend and they're continuing to flag up. But right now, I told you we're still counter trading the overall trend. Like right here was the double top at the daily high, dropped. It came back up with those buyers, lower high there. Here it's kind of, held up, but when it came back up there, hourly, lower high, they pushed it all the way down there. That's where it came down, almost to the lowest point of the day. Noon, when we started here, we bought right here at 12:05, and we came up, back down, higher low, but right there, we're not breaking it. So that block is still there, lower highs, and now they're bringing it right back down. So see how there was that bull flag there? But it's trading against the overall higher time frame trend. It's different if we were like moving up like this, where it's higher high, higher low, higher high, higher low, another flag, again higher high, there's another flag, higher high, because we're flagging with the trend. This one is flagging against the trend. So when we say bull flags have high probability of continuing to break to the upside, but you also have to understand the trend that you're trading. Does that make sense, guys? So I know some bull flags have high probabilities of continuing to break to the upside, but we're not officially like in a bullish trend, right? We're just in this. It's a 5-minute trend. Higher high, higher low, higher high. That's it. But when we look at the overall, remember when I told you I'm taking this trade, I'm counter trading. I verbally told you guys that. So that's why sometimes you can't get greedy when you're counter trading, and you got to know your levels above you. So I'm still in this. I haven't been tapped out. Told you my break even is below here. So as it came down there, got wick, but big selling pressure. A minute 48 to go. Watch. And then as we move into 1 p.m., let's watch what the new candle does. And this is just now, just a tip for everyone. When it gets up there, that's where... See, remember I said I should have taken my remaining 20% right when it tapped in there for the 80 pip profit, and I didn't. I said I was gonna hold this thing, watch it build, and sometimes shit like this happens, and it's gonna come down and take you out. But you can learn from it next time. Then say, okay, next time when it comes up here, I'm gonna take some profit. But it's all part of learning too. You'll learn that way. Because when it hits you hard the most, when it hits you in the pocketbook, that's when you learn the best. When it hits you in the pocketbook, that's where you're going to learn. I hate leaving money on the table. I hate it. It's like one of my pet peeves. I absolutely hate it. But it happens. And it happens when we want more and we want more and we want more than what the charts are showing us. So that's why I say, guys, stay disciplined and trade to your levels, trade to your blocks, be a zone-to-zone trader, be a tape trader from one line to the next line, things like that. And if you stick to that plan on a daily basis with proper risk management, just watch your account, how it will compound over time. That's guaranteed. If you follow, it's like a recipe for success. And every day you deviate from that, you're changing something up, okay? So look at that. There was a good return there. That was a big bearish candle that came, again, all the way down into this location. So we got a good wick there, good wick there, good wick there, good wick there. Around here, there's good buying support here. So they brought it all the way back up, and look at where they closed it. Again, in the green box, right at 50%, right at that red line. So now it could open blue as it is and continue to try and build up, or sellers could bring this thing down. Now watch the big fight now going into 1 p.m. on this last candle. This is the last candle going into 1 p.m. now. This is where the buyers and sellers are going to fight it out to take position of the next hourly candle. Highly sellers will win? Probably, yeah. If we're trading with the overall movement of the market, there's the big trend down. It came back up to there. And now this could be the elevator approach coming down, back down to test in here or down there. But you got to know when it comes in here, okay? That's a daily point of interest. Could be representing a good majority of that previous hourly volume right there. If it comes all the way down there, that's where everything started at 12 p.m. and that's where you got some protection from the lowest point of the day. Like if you're looking to buy gold, right there, 4,200, that's a good area. If you can buy, if they sweep the liquidity at lowest point of the day, that's better, okay? If you can buy there, that's okay. And if you can buy here, it's good, but not the greatest. The deeper you go in the depth of market, the better. The bigger the pending orders, the bigger the time frame buyers, that's where you want to be, buying at discounts. You don't necessarily always want to just buy the highest points, especially under a red block. Because if you do, you can see they're pushing you down. They're pushing you down. They're pushing you down. I'm in this trade from over here, so I'm continuing to observe while I'm in the trade. I haven't been taken out of my 20% still in. So now I got to continue to watch, right? Trading is a lot of it is visually observing what's going on, whether you are in a trade or you're not in a trade. Helps you, if you're not in a trade, it will help you understand where to get into a trade. Do you think that this is a good area to be trading? If you want, try it, test it out. Anybody drink their greens? This is what I'm drinking right now. You know your veggie greens? They are nasty, but they're so good for you. I don't eat a lot of fruits and vegetables, so I just put that powder in there. But it's actually a good flavor. I've had one that was disgusting, like a chocolate. This one is passion fruit mixed with water. It's actually really good. I could drink 1 or 2 of these a day. And you see, a lot of the volume is still located in this block here. Yeah, there was a break there, there was a close up there, but again, we're just kind of consolidating right in here. So we have 1 more minute, and then we're going into 1 p.m., a new hourly candle. Don't I think 4196 and 4186 are better to buy? Yeah, obviously. When you're going down, 4186 is down there. I haven't even charted that. That's below if they break the lowest point of the day. Yeah, that's good, but I would have a top-down analysis done down there, okay? You see, if I'd say that, this is better. What about 41863? What about 4147? What about, like 4100? So I could go down the depth of market, but I haven't, analyzed this area in between the purple to there. But if I come in here, I guarantee you I'll find some levels right there. There's a wick, a wick, a wick, a wick. So what did you say? You said 4186? I'll tell you, what about right there? What about 4182 is better? Why? Because look at it. It dropped in there, back up. Dropped in there, red line. There was the move up. There it kind of broke, came down there, but look at where it closed above, retested it, and then retested it. So there, 4182. I would just alter it from your 4186, put it at 4182, right? We can find any levels to buy. We can find any levels to sell. Just you got to look. You got to observe those levels, and you got to patiently wait for the volume to come down there. So you see where it is. Look at where we're trading right now. Okay, you think the market is just going to break down like that, unless there's some major news. But if it comes down, we still got to test this block. There could be buyers there, right? Could come back up. If it comes back down, could break that and then test this block right here, right? And then when it gets down there, it could come back up. Then it could break, fill the wick. Now we break the low of the day. They sweep the liquidity. Could be a major move coming up there. But if it comes up there, now we're coming down. So this block is red. This block is red. As we're coming up, could trade into that red block. Then the sellers are bringing it back down. Then we get to your 4186, 4182. So you got to see like the path we got to get down there, right? I'm just trading in this area right here. So obviously anyone's going to say, well, what if we buy gold at 4,000? Yes, but I'm not looking to buy gold next week or next year. I'm trading right now. Like we got to look at these levels right now. But you are correct. Obviously, the deeper down, the better the discount. I'm not arguing you with that. And then to sell also, like if you want to sell here or here, someone will say, well, Ron, isn't it better to sell at 4,230? Someone will say, Ron, why don't we sell at 4,240? Yes, but right now we're just doing intraday trading and scalping. So right there, it could go down, right? Could go down, could break, make this support. Then right there, right? We're not up there where you're selling at 42.40 because there's an hourly. Could get rejected there, and that might be the sell, right? So you gotta know what you're looking for, okay? So right now, 1 p.m., look at it. It's like clockwork, okay? So see, 12:55, now we just opened, and now the big, look at how the hourly candle, you remember our last hourly candle was a nice bullish candle? Now they opened this one hourly bearish. This is a momentum switch on the hourly. You know what I mean? No, it's not. It's a good question, but you guys got to understand what I mean. We can find discounted buying areas all day. We can find selling premium areas all day, but it all depends on your time frame, right? So you see now how 1 p.m. changes momentum, okay? So let this be, a lesson when you're trading, if you're going into a new hour or you're coming out of an hour, how things can happen. So now this big bearish candle, is filling these wicks. As soon as it fills these wicks, it will create a new lower low in the market, and then the sellers still have control because of the lower highs at this block, and they're carrying the momentum forward still. So what we did was we counter-buyed for a good 60, 70, 80 pips up there, but we didn't advance to give us 100 or 120, right? So that's where you got to know when it trades into this pocket here to basically do something, okay? And I was doing this as an example. I wanted more, and you can see now how the market could come down and punish me. But the reason I only have 20% remaining, okay? If I had my full 80% up there, I guarantee you I would have been closing up there. But with 20%, I can be a little bit more lenient on it, okay? So I will verbally let you guys know as soon as I get clocked out here. And on today's call, whether you bought, you were observing, whether you sold, learn from something. Learn from something. Did you manage your risk properly? Whether you were on the good trade or a bad trade. There, I just got clocked out there, okay? So that was my 20% break even. I got taken out, okay? So now you see how strong the momentum comes at 1 p.m. Remember, if you're learning, is this a pattern that's happening every single hour? There's an hourly switch in the market. Now, if we look at the overall, if we clean up our charts now, if we just clean up, I'm going to get rid of this. I'm going to get rid of this inside block. I'm going to now just rely more on the bigger blocks, Okay, so this is a big block, active. This is another block that could be active right now. And this one down here is kind of just supporting the lowest point of the day. So you see how I got rid of all that inside garbage that we were just trading? Now I focus more on the bigger block, this one and this one. If I'm looking to buy again, right here is an opportunity, or even deeper is an opportunity. But you got to understand now, here's the move that came down. So we had that one leg. There's the resistance now. You can visually see it clearly. And now this leg is coming down. So will it hold here and make a leg to come back up and to try here again and break out of there? But as it comes up, we're still counter trading. So we got to cut that bearish candle in half right there. Because if we come up, it could get a wick and reject it and continue push down. So that's a marker that you got to watch on that candle. That's a big bearish engulfing candle that closed below all of those wicks. So that's a big tough candle, and it's the 1 p.m. candle. So you gotta slice that one in half, because that's your resistance now this hour. If the buyers can build it up there and break it above there, well then they will close it above there. Then if it pulls back, that red line might be support to take you back up here, right? To get you to the next block above. However, if it can't break that, it could continue to drive below here, okay? Guys, we spent the entire afternoon on gold. I wanted to do US30 or NASDAQ, but we learned with gold. We stayed with one security the entire time. I hit a successful trade. I hope you guys learned something too. But the 20% hit break even. So how much capital did I lose? Nothing. Did I win some money? Yes. So I carry that momentum forward. I think about now my next trade. When I go into my next trade, how much of my profit do I risk on my next trade? Do I risk it all? Do I risk a portion of it? Relative, how close am I to my daily goal? Do I still have a lot of work to do? Am I there? All of these things. Everyone has to answer these questions, right? If you're going to also continue to trade this afternoon. I'm done after this, right? I do a majority of my trading early in the morning. Some days I like just private myself trading. Someone asked me the other day, said, Ron, why do you enjoy trading by yourself some days? As much as I love trading with an audience, and I love you guys, I also love to trade by myself. I've been doing it all my life, and I just enjoy that time with myself. You know, that's what gives me my edge in the market. I can do what I want to do without explaining myself, really focus on my trading and do what I need to do, learn more about the market makers. It's where I educate myself too, where I'm not learning price action because I've already taught myself price action. I'm learning other things in the markets, more deeper analysis, the way how markets really move on macro levels, on different money supply levels and things like that. That's what I'm continuing to educate myself, so therefore I can keep giving knowledge to you guys and learn more, as opposed to just answering stupid questions from some dumb people on YouTube. Not saying everybody, but there is some clowns on YouTube, and then I lose focus. So that's just how I am, guys. Maybe you guys will understand sometimes trading alone is like therapy. It's a therapy session for yourself. It's just you and the markets. You know, sometimes I gotta go against the markets one-on-one, just myself and the markets. But I do enjoy what we do here live in front of an audience, but once in a while I like to just trade my own stuff. I do a lot of stock and options trading myself too. We'll get into that education, but I'm not ready to take you there if you guys don't understand risk management, because it's a whole different ball game when you get in stock and options, and especially if you don't understand risk management, you could get your accounts cleaned out real quick, faster than you can do in Forex, futures, or prop firms. So you really got to take it to the next level. Like when you go into stock and options, it's like moving up to the major leagues. You're no longer in the minor leagues anymore. You're coming where the big time, where the institutions are trading. You're trading the big corporate names. You know, there's a lot of activity in there, but there's a lot of good stuff that can come out of there. I don't want to scare anybody, but you got to come with the proper mindset to learn that stuff. It's not difficult, right? We're doing the same thing. We're analyzing candles. But there is just a little bit of things that are just a little different than futures and Forex involved in stock trading or options. But we're going to get there very, very soon. Okay, guys, I'm going to wrap it up. I'm going to go to my garage and get a little workout in right now. And hopefully you guys had some fun today. We're going to come back for a second session later this evening at 6:30 p.m. We're going to do a live Tokyo session. We'll watch gold. Again, we'll do a top down. We'll see how gold closes today, and we'll come back for that. Guys, if you want to join our free Telegram channel, it's pinned at the top of the channel for you guys. Everything is available for you guys in here. Join this free Telegram. Also, if you want to join the team, you're welcome to join the team. There's free blogs available. I suggest everyone goes over today's blog, Keys for Success. Don't trade how we did. Well, we were trading today, but observing too, more for yourself. Some days just watch and see, and then see how things are playing out. Like if you were just watching what was happening on gold right now and you didn't take any trades, do you see anything happening? Like, do you see patterns? What would you have done here? Would you consider buying up here? If you did, you're in drawdown. So that's how you can learn. You can just tell yourself, if I bought at that block, I'm in trouble, right? So then you got to learn how to maybe sell that block, and then you're in the money if you sold that block because you're going with the overall trend. Also, if you were in a buy and you took it all the way up there with me and you didn't do anything, now the market reverses and you have nothing to show for. So that's why I take out 80% and leave the rest remaining to run. The ones that run can teach you also a lot about your trading, okay? And guys, we appreciate you. Hit the likes on YouTube if you learned something today. Subscribe to this channel. This is what keeps myself and Dave motivated to continue to do this on YouTube. If we lose this, like this uptrend, I guarantee you I won't be here because I'm not motivated to be here. I'm not. I've been doing this for 6 years. The only thing that continues to drive us is this, helping people. If we're not helping anyone anymore, then my work is done here. I'm going to go help the students at my son's high school and go work with them because this takes some time out of my day to do this as well. Okay, guys? So hopefully you guys learned something today. And if you didn't, join us on another call. Maybe you'll learn something on another call. But you can also go back and watch prior videos and see what we do. And if you'd like to join the team and trade with the sniper community on Discord and Dave and all of the other snipers, you're welcome to, guys. And have a good day, everyone. We'll see you guys tomorrow. Am I buying? No, I'm done. You can buy, you can sell, you can observe, you can do whatever you want. I'm done myself for today. Not today. I'll see you guys later in Tokyo. Have a good day, guys. Yes, Tokyo session, 6:30 p.m. Have a good day, guys. Enjoy the rest of your day. Hopefully you guys learned something how markets move at 11 a.m., 12 p.m., 1 p.m., momentum switches. So you gotta understand these things for the time frame that you are trading. Okay. Have a good day, guys. We'll see you guys later. If you guys do join the evening session, if not, enjoy your evening. And I'll see you guys again.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.